Hello everyone, this is Neha Verma, School of Finance and Commerce, Calgary University. Today I'm going to discuss the key terms in financial statement interpretation and reporting.
Now, what are the prerequisites in order to grasp this content in a better way? So, first of all, you need to have basic understanding and knowledge about concepts of accounting and accounting principles. There should be basic knowledge about the conservatism principle, and there should be basic understanding of the international business and the global environment in order to grasp this content in a better way. Now, what are the objectives of this particular session? So, a student will be able to understand terms like accounting standards, GAAP, IFRS, IAS, Ind AS, and the difference between the US GAAP and the Indian GAAP.
Let's start with the accounting standards. These are the set of all the rules and regulations which help in um, preparation of financial statements, and the accounting standards basically help in comparing and evaluating the true picture of the organizations. Now there are two organizations. First one is IASB, that is International Accounting Standards Board. It is based in London. And then there is FASB, that is Financial Accounting Standards Board. These two organizations basically develop and enforce financial reporting standards. They formulate the accounting standards internationally. Also, though these two are separate organizations, first one, that is IASB, is based in London, and FASB, that is based in the USA. Though these are separate and independent organizations, however, they are working closely and cooperating with each other and working together for formulating the accounting standards internationally. Now, GAAP. So, generally accepted accounting principles refers to the set of accounting standards, principles, and procedures which are issued by the FASB. IFRS, or the International Financial Reporting Standards. These are the accounting standards that are developed by IASB, and it is for making the financial statements understandable and comparable at a global scale. So one country, one country's company can be compared to another country's company. And IFRS are basically used in more than 110 countries. So it is widely accepted and globally popular. Though IFRS is very much similar to the US GAAP, however, there are some differences. IFRS is more principle-based accounting standard, whereas the US GAAP is more rule-based. Now, IAS, or the International Accounting Standards, are the older accounting standards, that were issued by the IASB, and IAS were replaced by the International Financial Reporting Standards in 2001. Now, India had two options, either to adopt the IFRS as it is, that is without making any changes, or to converge with the IFRS, that means after making changes. So, Ind AS basically is the set of accounting standards that were issued by the MCA, that means the Ministry of Corporate Affairs, and formulated by the Accounting Standards Board of um, Institute of Chartered Accountants of India. These are basically the converged um, accounting standards. These are converged with the IFRS in order to harmonize the diverse accounting policies and facilitate the comparisons. So now a company in India can be compared with any other company in any other part of the world um, with the adoption and convergence of IFRS globally. Now, India will have two set of accounting standards. The first one is the existing AS as given in companies rules 2006, and the IFRS that are converged Indian accounting standards. Let us now move on to the differences between the Indian GAAP and the US GAAP. Basically, the US GAAP does not follow any principle of conservatism. However, the Indian GAAP does follow the principle of conservatism, that is the principle of prudence. There is no prescribed presentation requirement that is required in case of the US GAAP. However, as per the Schedule 3 of the Companies Act 2013, there are certain rules and regulations that are prescribed for presenting the financial statements. Nextly, the cash flow statements under the Companies Act 2013 shall be prepared for all the companies. However, some of the companies like the small companies, the dormant companies, the one-person companies, these are the companies which are excluded from making the cash flow statements mandatorily. However, for when it comes to US GAAP, the cash flow statements are mandatorily made for every company for 3 years, for the current year and 2 previous years. Then, as per the US GAAP, effect on changes in the method of depreciation should be given prospectively, unlike in case of the Indian GAAP, which requires the retrospective effect to be shown, which means the recomputation of the depreciation with the difference to be adjusted in the period in which such change is effective. And next is the as per the US GAAP, the current portion of the long-term debt shall be recognized as the current liability. But that is not the case in case of the Indian GAAP. Finally, in case of the US GAAP, the investments are classified as held to maturity, trading security, and available for sale secure investments. And these are further segregated as current and or non-current investment on individual basis. But as per the Indian GAAP, investments are classified as current, long-term, and investment in property. So these are some of the differences between Indian GAAP and the US GAAP. This list is not exhaustive. There are other differences as well. However, these are some of the very important differences between the Indian GAAP and the US GAAP. These are the relevant questions from the examination point of view. Question number 1 is, what are the key differences in the provisions under the US GAAP and the Indian GAAP? So we have already covered this one in the recent latest slide. The next question is about what are Ind AS and has India adopted the IFRS? So basically India has not adopted the IFRS as it is. We have converged to the IFRS, and that's what Ind AS are. Now the third question talks about the differences between IASB and FASB. So we've already covered this in our initial slides. IASB is International Accounting Standards Board, which is based in London, and FASB, which is based in the USA. The next question deals with the relevant features of the IFRS. A lot has been covered on IFRS in the previous slides, so you can refer to them for this. So these are the references for this particular slide. Thank you so much.